Hey y'all, what's happening? So today I thought let's talk about the stock market crash. For the past few weeks, everyone has been kind of feeling some kind of way about the stock market. Should you be worried about the stock market crash? Should we be worried about the stock market crash? Maybe, maybe not. But in fact, I mean, if you look back in history, you'll realize that this is not something new. This has been something that's been going on as long as the season has been around. So you worried about the stock market, it's like you worried about winter time or the summertime or the springtime or the fall. In fact, what we should be doing is we should be getting prepared. We should be ready for the winter time. We should be ready for spring. And we should be ready for summer. Every year, we expect one of these four seasons. So every year, we should also expect correction or the stock market crashing. Well, let's look back into history and think about in modern history, when have we experienced the stock market crash and how has that been, how has that really affected us as people? And when we and it once we look back, we will realize that in fact, instead of worrying, we should probably just be ready for it. In fact, it should be the best thing that happens to us. For some of us, it's like expecting Black Friday. That's when we should be ready to shop. This is the only time you should have money on the side. Except for your emergency funds, this is the only time you should be saving money because stock market Black Friday will soon be here before you know it. You know, as we speak, for the past 3 days, the stock market has been going down and down and down. And this may be the right time to actually buy while it's going down. So, the famous stock market crashes include those during the 1929 Great Depression, Black Monday of 1987, the 2001 dot-com bubble. Remember the dot-com bubble bust? The 2008 financial crisis? And this was just in our rearview mirror, the 2020 COVID-19 pandemic. It literally just happened. And even that, we were not sure what was happening. So here we are in 2021, and we're wondering, and we're scared, and we are worried about the stock market crashing again. Again, it's like winter, spring, summer, fall. It's natural. It's natural season. We should be ready for it. So, let's, talk about some facts. Market correction happens pretty much almost every year. And for the past 116 years, from 1900 to date, when the stock market correction happens, sometimes people are scared that it may be a crash. And it usually happens an average of about 56 days. And an average of about 14% is down. And quickly, pretty much usually 80% of all market corrections never becomes a crash. Although people are wary about, oh my gosh, are we in another bubble? Are we in another crash? But it usually never becomes a crash. 80% of all market corrections never becomes a crash. And during these times when people are so nervous about if they're going to lose their money or not, as soon as there's a little bit deep, they go and take out all their money. And then what happens is before they know it, it's gone way up. Now let's talk about the market crash, the bear market. You know, what does it mean when you say a bear market or stock market crash? So I did say that, market correction is 10 to 20%. When it dips, when the stock market dips about 10 to 20%. But when it is over 20%, then it's called the bear market. Or the market crash, right? So basically, the bear market or market crash happens every 3 to 5 years, and it looks like we've been long overdue. Because it really hadn't. It really hasn't happened any of recent years. 2020, we thought that was gonna be a crash. I mean, everyone was nervous. Everyone was scared. Even Bitcoin, which is currently at over 50,000 today, last March of 2020, Bitcoin came all the way down to 5,000. I mean, imagine buying Bitcoin when it dipped. You'd have been way up and feeling good about it. So let's understand that every 3 to 5 years, in the past 100 years, okay, in the past 100 years, every 3 to 5 years, pretty much, the stock market goes, into a crash, and it lasts for about 1 year. And averagely, that crash will go as low as 30%. I mean, imagine losing 30% of your money. I get it. I mean, for most people, that is their entire life. People have committed suicide or these things can result to death. So I totally understand. But what we should be doing, rather prepared in understanding that, rainy season is coming, winter's coming. Maybe it's a storm. Even if it is a storm, if we get ready and if we are well prepared, we will be good. We will be fine. So what we should be doing is any of your portfolio, you should be holding it. You should be holding strong, because sometimes during these times we get nervous, we get scared, and we sell out our most valuable stocks, only to realize in the next year or two that we have lost a fortune. But like in anything, it is not what happens to you, but how you react to what happened. Right? So you should not be worried about the stock market. In fact, you should be keeping money. Right now is the good time for you to be buying, because as I speak, Tesla is way down. Tesla stock is below 650. It wasn't too long ago, it was 900. But I am bullish on Tesla, and I know it's only a matter of time. Tesla is going to go way back up. So hold with iron fist, diamond hands. Don't let go. An investor who holds onto their stock or cryptocurrency, regardless of the risk, really benefits much later. So in 2008, when there was a stock market crash, everyone was going crazy. Only for 20, so basically when that happened, a lot of people pulled out their money when they were already at loss because it went pretty low. At loss. They were already at loss, scared that they may lose everything. And within a year, in 2009, it became one of the biggest bulls market, going up all the way 67%. So if you had taken out your money at that time, you were definitely at loss. Only because of how you react. It's not what happens to you, but how you react to what's happening. Now, the S&P 500 returns about 8 to 10% in the past 20 years, averagely about 8.2%. So, while past performance may not represent future performances, we also know that it's really usually a good measure for us to know what are the possibilities. You know, Warren Buffett once says, be fearful when others are greedy, and be greedy when others are fearful. So, this is the right time for you to put aside some money. Time for you to be greedy. Time for you to buy the dip. Time for you to buy like it's Black Friday. In fact, we don't know when it's going to be the lowest dip. You can't really predict that. You know, the stock market, even a stockbroker, does not really know how this thing works. No one knows. Besides the fundamentals and a lot of speculations and whatnot, no one really knows. It is all about luck and who knows. So you cannot try to time the stock market. The best thing we can do is pretty much buy on, average our portfolio pretty much every day, every week, every month, whenever you can, buy. So whenever it goes down, you buy. When it goes up, you buy. And that's the only way you and I can win. I hope that we are ready for whatever may come, be it a crash or not. I am not a trader. While I do not trade, I only invest and I hold long as possible. So that should be the goal. You hold long. And especially if the stock market is not something you're so used to, for the most part, a lot of people have just now gotten into knowing about the stock market. So you may be wary. Do not. It is time for you to get as much money as you can, do your due diligence, and buy and hold. Hold with an iron fist and hold with the diamond hands. So therefore, you will definitely be excited for that day when it's time to reap the rewards for the patience that you have. Well, I appreciate you watching this video. Go ahead and smash the like button and subscribe to my channel. I look forward to sharing more videos with you. Until next time, I'm Rescue, and this is your life guide.